Households across the country have just been hit with the single biggest interest rate hike in more than 2 decades. If you have a mortgage, that means you're about to be slugged thousands of dollars more a year in repayments. But while the hike to your home loan is out of control, there is something you can do that could save you a fortune.
It's always been the great Australian dream. But today it feels more out of reach than ever before.
It is getting harder and harder.
Huge rise, rates to lift by 0.5%. The Reserve Bank desperate to quash inflation.
It's an aggressive move, the Reserve Bank announcing it's lifting the cash rate from 0.35% to a whopping 0.85%, the second hike in as many months.
I was quite shocked. A 50 basis point increase is the biggest increase we've seen from the Reserve Bank in 22 years, so this is a very big move from them.
It makes me feel very anxious, the rising interest rates. I think about it a lot actually.
I am a bit nervous because, every time they spike you have to replan your budget.
We knew another hit was coming, but not one this big. Home loans expert Sarah Megginson from finder.com.au.
This could be a strategic move by the Reserve Bank to go really hard now and then they'll take a softer approach throughout the rest of the year, but we really don't know.
Oh, another one. What about on the next page?
Courtney, David and little Caden Shaw are one of millions of Aussie families sweating on today's cash rate announcement.
Groceries, petrol, it's just getting crazy, and to add interest rate hikes on top of that.
They were enjoying the low interest rates after buying their Lang Lang home in Melbourne's southeastern suburbs in January. Working in real estate herself, Courtney had the mortgage well thought out.
Over the years, we've had to be very tight with our money. So I like to be very organised, and I think if you are an organised person, it does make it a lot easier.
It's all about inflation. So high inflation means things are getting more expensive, so cost of living is squeezed. So the RBA needs to get that down, and the way that they get it down is to increase interest rates.
Senior Associate and Economist at the Grattan Institute, Joey Maloney.
There's a real difference between people who borrowed before COVID and people who borrowed during COVID. People who borrowed before COVID used the lockdowns to increase their savings and get ahead on their mortgage.
It's a different story for investors post-lockdown.
People who borrowed late last year in particular are facing that double whammy of interest rate increases on big loans.
I've even noticed with our groceries that I'm spending up to $100 extra a week at the moment. So you add that on top with petrol as well, we could be anywhere $800 to $1,000 a week extra with our repayments.
So how will today's mammoth rate rise change what you pay each month? It'll mean the average variable rate has moved from around 2.5% to 3%. So for a $600,000 loan paid off over 30 years, monthly repayments will jump from $2,370 to $2,529. Over the life of the loan, that's an extra $57,203.57. But of course, it'll inevitably be more than that once future rate rises kick in.
I think costs will need to be cut somewhere, whether it's going out for dinner, unfortunately family holidays, trying to be more smart savvy with your money at the supermarket.
But there's one thing you can control.
At the moment, I think we're sitting on about 2.59%, and that's currently with ANZ. I know there are some better deals out there at the moment, and I think with the interest rates hikes, we will definitely be shopping around to try and secure a better deal.
Courtney is all over it when it comes to refinancing their loan, but she's the exception.
Americans refinance their loans every 6 months. They just don't stop. Australians are not lazy, but they get comfortable. I think Australians could save a fortune.
Mark Boris is executive chairman of mortgage broking business Yellow Brick Road, which Nine Entertainment has a share in.
You can't be sitting back and complaining about interest rate rises if you can go and save effectively 4 rate rises just by refinancing.
So go and do something about it. Don't just sit there and whinge about the Reserve Bank.
Get off your tush and do something about it straight away.
You heard him.
There are a huge swathe of Australians who never bother to check their interest rate. They don't know if they're paying too much, and they never actually refinance. So at the end of the day, they're paying way too much.
Mark explains you will have to fork out fees to refinance, typically around $1,000 to leave one lender and join another. But it'll likely be worth it. As an example, he crunches the numbers on refinancing a $500,000 loan.
They borrowed the money 5 years ago, so they've got 25 years to go on the loan. Their interest rate is 3.35. Their monthly repayments are $2,463. This is what the interest rate they could be paying. They could be paying 2.49%. When you re-borrow, though, you borrow for 30 more years.
So you go back to the 30-year
You go back to 30-year loan. But your repayment's $1,973 per month.
So by refinancing your loan, finding a better rate, your monthly repayments are going down by almost $500, and over the life of the loan, you're saving $20,000 in interest.
$28,000 in interest. There's a lot of money. There's a lot of holidays. That's like a lot of annual holidays.
Those savings could go towards a holiday, family costs, or back into the loan.
If you take the $490 that you are saving, if you take that $490 and you pay it off every month off your principal, in other words, make an extra payment, then you'll reduce this 30-year loan down to 21 years and 11 months. You can go through that process there on this app. You go into the calculators and you work it out.
Mark's business is one of many that's designed a lending app.
It asks you what your income is and it takes you right through the whole process until you get to the home loan approved.
I just could not apply for a new loan on my phone. I need to go in and talk to a person and look them in the eye. I mean, of your customers, what percentage are doing it all online?
Right now, a small percentage, but a lot of them are making their inquiry online.
With the pressure families are facing only getting worse, it begs the question whether the great Aussie dream is all it's cracked up to be.
Probably not so much these days. There's a cohort of people, say people under 30, who have taken the view they may never buy a property or a home.
Oh, it's always been a dream of mine to buy my own home.
But for this 20-year-old cafe worker, the dream is alive and well, and she's finally achieved it.
I've always had a second job on the side, no matter what it is. Like right now I'm working at Coles as well, and I work there once or twice a week on top of my full-time job. Just got to work, take any shift you can, make as much money as you can and save as much as you can.
Courtney's under no illusions that more rate rises will mean she needs to find a higher paid job. And borrowing in the current climate wasn't a fun process.
When you see the interest rates go up, you have to resubmit all your bank statements and go through the whole process again with the bank of getting a new loan amount.
Higher interest rates, yes, that reduces your borrowing power, but it does that for everyone. So that should lead to lower prices.
And perhaps the pain won't go on for as long as we fear.
Something has to give. The Reserve Bank can't control the cost of living. What the Reserve Bank can control is the number of rate rises. And my feeling is that the Reserve Bank will not do 14 rate rises because they don't want to destroy the economy.
And this advice from one savvy mortgage holder.
It's no good having funds sitting in your bank account. You either need an offset account or put it on your mortgage and get a home loan that's got a redraw facility.
That's all very good advice.